Oh, I love the background.
Oh yeah, I thought this
There
was a
we
good one for this one. I got a bunch of different crazy backgrounds. Bitcoin one, I think I had that with you last time. I got one with Polka City, which is a metaverse blockchain game. I got all kinds of them. But
love
I
it,
figured something
man.
like this, the Wall Street. I even made an NFT of Wall Street Bet Guy, but just one. Somebody bought it for $58.
No way. I was gonna
Yeah,
say we should just jump in because these are all the stuff I want to talk about.
yeah.
I think that's so funny. Did you have you been like in the middle of all of that stuff?
Yeah, so it's really funny because remember how we talked about before? I'm a big believer in habits, but I'm careful about doing some of this stuff because I don't want to mess up my old habits.
Sure.
But I do remember recognizing with Wall Street Bets and Reddit, GME, I was talking to some guys I know about. It's like 17. I was like, with all this chatter and it's short over 100%.
Yeah.
I think this could double, in the next year. I didn't think anything like it was going to do. So I was like, yeah, I'm going to buy 17. And literally like the next day or 2 days later, it doubled. And of course, I was stupid. And I sold it because it hit my price target. And then the next thing I know, I turn around, it's like $500.
That is so funny. So did you get in on like GameStop and all the fun ones?
Well, that was a GameStop. It was at 17 when I sold it at 40. And then I started noticing AMC was being talked about. So I said, let's get in that. But I waited till it was like $5. I should have did it when it was like $1.90. But then, of course, I had what they call, I guess, weak hands. When it got to 12, I said, oh, wow, this is ridiculous. It doubled so fast. But then I found this one called Costs. And I said, oh, my God, the float is only like 6 million. And it's got really cool memes. I never heard of this thing before, but it looks memeable. So now
What
I'm
was it?
getting
Wait,
this
what was it?
memeable strategy.
What was it called?
Costs, KOSS.
KOSS. Okay.
And it's these old headphone sellers. I mean, I'd never heard of them before.
Oh,
But
I
I
know you're
was like,
talking about. Yeah.
oh my God, this could be the next one. But of course, I sold that too early too. But it went crazy. But it was kind of fun. But it's interesting because I've been telling people now, not as like any kind of investment advice or anything, but really a
Yeah.
meme is a strategy. Even in crypto, some of these memes that are joke projects, and not just Doge, but other ones, they have ridiculous returns, like in the hundreds of thousands of percents if you get in early. Now they're all obviously probably going to zero eventually, but you
You
get
think
what I'm
so?
saying.
Yeah, yeah.
I mean, well, it depends because I think if a project gets a true community behind it, gets like 30,000 holders, and then devs start building on it, then
Yeah.
it's going to become a real project. Like for instance, Doge was literally started out as a joke, but I believe it's like a soft fork of the Bitcoin blockchain on the Omni layer. I may not be technically correct on that, but I think that's what it is. And the guy who founded it came on Yahoo and said he sold all his Dogecoin years ago because he just did it as a joke. And it just became this thing, a life of its own. I mean, because Shiba is cool, and now there's actually people building on Doge, and it is a true payment rail. So, I mean, if somebody really builds it out, it could be a real technology. It's just there's so many of them. The float is ridiculous. I mean, there's so many, like, I think it's hundreds of billions, if not almost a trillion. There's a copycat called Shiba Uno, and there's like a trillion or 10 trillion. It's a number so high I can't even calculate it. And people are trading that. And it spikes when like Elon tweets said he was buying a Shiba Uno. That thing went up like 300% in seconds.
Yeah, I know. I think it's crazy that Elon can just like, say anything. I laugh at him, and obviously if you follow this, I mean, you follow Dave Portnoy and all that stuff too, Davey Day Trader
Oh,
and all that.
I love that guy. When he used to say stocks only go up, and he started calling. He said stocks, and it became a meme. I mean, that guy's a marketing genius with bar stools, and then he
Marketing
got acquired by Penn.
genius.
I mean, people like act like he's some whatever, but I think that guy's a genius.
He launched his own podcast. I don't know if you've heard it. It's called the Dave Portnoy Show. And it's pretty funny because I mean, you get a good sense of just like how good of a marketer he is, and then like I mean, he's just so good at it, and so it's like you
I did
realize it's a
see
lot
that.
more than just the like crazy stuff he
I
says.
saw him. I saw him interview Vlad, and he said, "Well, I'm not going to wish you luck."
Yeah, yeah. What was your thought on all that? Because I know you're in the middle of all this stuff.
So
What was your thought? Because I'm on
I have
Robinhood and I got
I
paused
have
on everything.
Yeah, I have always said that stocks go up or down based on supply and demand within the market structure at the end of the day. And I believe, everyone has good intentions. And unfortunately, due to clearinghouses changing their margin requirements that can call you in the middle of the night if you're a broker, and Robinhood, I believe, has their own clearing firm, so that makes it even worse. And I don't believe anyone was prepared for the surge in all these meme stocks. And if you're taking on options and you're an options on market maker, you're taking on risk. You can take on gamma risk and all these other things. So if you can just say, hey, as a market maker, I'm not going to clear your trades. So now I don't know if this is the case with Robinhood, but it's very possible that they became on the hook, the counterparty for all these trades. Well, my God, all these people on options and on leverage and all this, if this goes the wrong way, Robinhood could be technically insolvent. Now, I'm not saying they were at the time, but if it just keeps on going the wrong way. So obviously, if you're their clearing firm or whoever manages the clearing firm, it's internal to them, calls them up and says, hey, the VAR, value at risk, is kind of getting, on the line. You guys need to put up more capital so that doesn't happen, a market accident. And I believe that's probably what happened. And unfortunately, it probably wasn't communicated well to the users of Robinhood, who probably wouldn't really understand all that. But I think that Robinhood is such a following before this that if Vlad would have said, and he can't use the word liquidity, because you say it's a liquidity crisis in the financial markets, it's the end. Everybody just runs you over like a train.
Could you explain to everyone why that is? Like, why has that been such a term that they can't use? I think a lot of people that listen to my podcast wonder that and don't understand that.
Right. So I think, real quick to finish what I was saying, if he would have just put out a statement, maybe his advisors or lawyers told him not to, hey guys, it's internal things, it's kind of in the weeds, but I'm really on your side, so I'm going to have to do this. I'm really sorry. I think if he would have said that first, people would have understood. Yeah. But then he went out and did it and all these rumors. So yeah, if you're in the financial business, there's these things called counterparties. And interestingly enough, the other day, some hedge fund that's got some ridiculous leverage is blowing up because they're using contracts for differences. But a lot of people don't realize if you're a high net worth individual or an institution or hedge fund, you can get more leverage than the regular retail account. You can get 8-to-1, 10-to-1 on certain things.
Oh, really?
And you can hypothecate assets. If you do it with more than one broker, you're not, basically, I guess, transparent with them, your leverage can get into the hundreds of one. So obviously, if a move goes the wrong way, you're screwed. But the counterparties are also screwed. So let's just say if you're a brokerage firm or institution, and one institution that you're a counterparty to has a liquidity crisis, you don't want to deal with them anymore. So you immediately cut off business with them because that's like, fruit of a poisonous tree. It can infect you. And if there's leverage involved, you don't know who else the counterparties are, who's hypothecated what's really covered. So it becomes into a save my own ass thing. And just like in the case with this hedge fund / family office guy, I don't know if it's true, but the rumor is like Goldman or someone noticed something was off first, so they bailed out first. But as soon as one person bails out and a second person bails out, the rest of the people are screwed. You got to be the first one out. And liquidations start happening, and the margin call happens. And it's a waterfall effect because nowadays everyone's in the same damn stocks, people are on leverage. And that's why you get these ridiculous moves up and down, and they're so exaggerated. Because if you understand the market structure, they're not really that exaggerated. I think we even talked about market structure a little bit the last time.
Yeah.
And people don't get that supply and demand based on market structure. But I am pretty happy that I've seen there hasn't been a market accident yet. I think we've almost had 3 this year. And what that says to me is that the market infrastructure they have right now with the stops in place, with the circuit breakers, is working. If this was 1987, I think we would have already had a big accident. But what does concern me is there's going to be your unknown unknowns, that there's something that's not covered in the infrastructure and the all the checks and balances that someone's going to do that none of us have thought of. And that's going to cause the market accident that causes the cascade that causes all the margin calls and the next crash of 87.
Yeah. No, that makes sense. How do we I think it's funny. How did it take this long to have something like what happened with GameStop, from your opinion? It just seems like the internet's been around for so long. I mean, and especially like social media, it's funny that it took all the way till, basically 2020, 2021 to see this crazy, I don't know, backing of just different stocks we've seen.
Right. So I think it was a number of things. I mean, first, we've never had. So Robinhood, I give them all the credit in the world because they democratized trading. The other brokers had to lower the commissions. And I personally, when people say, oh, my God, I didn't know they were, market makers were paying for order flow. Well, what do you think? It's free. It's not a charity. It's not a foundation. I mean, they have to make if it's not profits, cash flow somehow. So you are the product. Just understand. But I do believe, even though, they make a big thing about politics, yes, there's best execution, and I forget the term for the better execution. But I believe many people are far better off by getting zero commission. And even if the flash traders are front running your trades, which provides liquidity, look at all the people who made all that money in GameStop and were able to donate to different animals and things and pay off loans. I mean, that's life changing for some of those people. But part of the reason I think we didn't have it, we never had a system like Reddit where everyone could organize, and a leader like that guy, Deep Value, whatever his name is, probably had an expletive in front of it.
Yeah.
Understood market structure and was able to help those guys kind of in a friendly way, but not in a financial advice way. And also, I believe that COVID and stimulus checks and people sitting at home and didn't have anything to do, and there was no sports, so they started gambling literally in the stock market because they thought, Robinhood's almost like a game, like fantasy sports or something. So easy to do, and I just got money from whoever they got it from, however they got it. And then also some of them might have been getting more money in unemployment than when they were working in a lower paying job. So they have
Yeah.
nothing else to do. And then one or two friends starts doing it. And then you become part of this tribe community on Reddit. And everyone just starts believing in this GameStop because GameStop is cool. A lot of people grew up with games. I mean, it's unfortunate we're going analog to digital is ruining their business. But I believe, though, that that guy, Ryan Cohen from Chewy, and he's on the board, if he were to change over GameStop, take them analog to digital, add in some other things that are more e-commerce like Chewy, even add in things like NFTs and new technologies, GameStop, not advice to anyone, but it could be undervalued because it could be the same market cap as Chewy one day, which I'm not sure what the market cap of Chewy is now because the price of that's fallen since the stocks fell. But at one point, I was saying, I know this sounds ridiculous, but at $500 a share, if that's par with Chewy, if Ryan Cohen tomorrow became the CEO and was totally pulling all the strings, I don't think that's so ridiculous.
Even to where it got to, you don't think so?
So I'm going by market cap because at one time Chewy, I believe, was like between 89 to, I think it was 89 to $100 billion company. Don't quote me 100% on that. And I think it's $500 a share. GameStop was near that. And what I was saying was if Ryan Cohen took over today and they did a secondary and sold shares in the market and raised capital, so GameStop had the money to do all this stuff and innovate, I was like, why couldn't it be? Because the stock market's a forward predictor. It's saying that the future of GameStop is better than the past. And even like really smart dudes like Michael Burry recognized when GameStop was like $2 that it was way undervalued. The likelihood of them going out of business was very low. He probably didn't think it was going to $500, but he might have thought, he might have thought like I thought $40 was reasonable.
Got it. Yeah. No, I would agree. It was crazy. It was fun to watch though. I got in on it a little bit. I was a little surprised. I mean, I know Vlad, and then he did a bunch of different interviews. I just felt like I was a little surprised they weren't a little more, I don't know, like dumbing it down and just simplifying it for everybody. Kind of like what I try to do. Just because I feel like there's so many young investors that got on Robinhood for lots of great reasons. And I still use Robinhood. I love it. But it was a little strange. I felt like it took a long time, and they probably wanted to be careful about how they came out and explained it. Obviously, there's a lot of risk there. What is your thought though? Like, I don't know if you use Robinhood or not, but like, I know a lot of the platforms pause trading on those, but I think they obviously got the most flack. Is there like, is there a reason people should leave Robinhood at all at this point? Or do you think, I mean, I know that's a little political, but like, just from your perspective.
At this point, I would say if they hadn't left, they shouldn't. So I do have a Robinhood account and a Webull. I call it Webull, but it's Webull. And I have a couple others. I have Public. And then, of course, I have, actual prime broker accounts and accounts that are a little more sophisticated. But people don't realize, too, like Fidelity, they don't necessarily rely as much, I've been told, on with a zero trade commission as far as, or even Schwab, to get the market makers paying you for the order flow because they have asset management businesses, they have prime brokerage firms. So there's things like Fidelity where you can have an international account where you actually still have to pick up the phone. If you want to get a certain stock that's not in the United States, you pay a higher commission. There's all these settlement fees, but it can be worth it for some of these asymmetric bets. And they have asset management things where they could charge 1% or different services where you can pay. So they have other ways to get revenue. Robinhood's 100%. Payment for order flow was their only revenue because they're not getting revenue off of you other than Robinhood Gold where they're charging subscription. Yeah. But I think at this point though, now that I guess the information is out there, Vlad was put in like the worst of places. Maybe it could have been communicated better. I don't know how it could really be handled any better. I do know that like TD Ameritrade and some of them came out, Interactive Brokers, that one founder guy came out and said, hey, they threw their clearinghouse under the bus and said we have to change things because when margin, and if you're a broker, you can change the margin limits yourself to your customers.
Oh, okay.
That happens all the time. But what Robinhood did, and it's also common, is they made it that you can only POC, position on close. I may be getting what it means wrong, but it's basically you can only close. You can only close a position and not buy. It's just that there was so much rampant buying in GameStop and these meme stocks that it got noticed. That has happened before. Position on close things when markets get out of hand.
Oh, see, I guess I never knew that. Maybe I haven't been in the game long enough to know. Like, how often does that happen? Like, I guess I've never seen it.
Probably not to retail people at this level, but it's happened before to institutional players in certain stocks. I can't think of any real instances offhand, but what people don't realize too, and I say history kind of repeats itself. The original meme stock stock is the Piggly Wiggly. I believe it was 1922. They had some massive short squeeze, and then like the institutions or someone involved, I don't know all the rules or what happened because it was obviously 100 years ago, changed some of the rules, and it became a big stink back then. But now we have social media, everything spreads like wildfire.
Yeah.
It gets sensationalized, everything moves so faster. But it's awful funny how history repeats itself with a massive short squeeze. With nowadays, the Piggly Wiggly would definitely be a meme.
Yeah. Oh, for sure. That'd be a great meme, wouldn't it? Yeah.
it would be incredible. But yeah, I don't necessarily fault everyone. I mean, everyone did the best they could. And obviously, if you're Vlad, you know there's going to be blowback because you have that cult following for what it's went against everything Robinhood stands for. You know, taking from the rich, giving to the poor, helping out the little guy. But
right.
At the end of the day, it doesn't matter how much money somebody has. You can always get into a situation where you need more money or something happens that puts you into a situation where you actually really need the money, even though you could have billions in your account or your personal net worth. If you get in an over leveraged situation or where margin can happen or something of that nature, it don't matter how much money you have. That's how rich people go broke, because they're over leveraged. And when I say rich people, I'm talking about like titans, people that are worth billions.
So, and that's a good question, because I had some people ask me about this. Do you, I mean, I don't know. I guess people with like Titans, for example, like what you're talking about, do a lot of those people still like take huge margin calls? Like, is that still, I guess they just have more capital to throw at large margin calls so they can make even more. Is that what happens? It just seems, I feel like if I got to that point, I would maybe like not be as risky and just put some.
Well, remember too, though, that they can get better leverage too. So for instance, like on something like government treasuries, you could easily get 8 to 10 to 1 leverage. No one ever bats an eye. Well, supposedly there was some kind of black swan and went the other way, like, well, and what happens with a lot of these guys is too, remember, let's say if you're running a hedge fund, and let's just say some percentage of your net worth is in that hedge fund, but you're also getting fees on billions of dollars, which is a lot of income or cash flow coming in, and then you get carry on results. So hedge funds are taking, massive risks relative to what a normal guy would do using leverage. So it's just like all those people shorting the GameStop. That was hedge funds ridiculously shorting over 100% of the shares of the GameStop. Now, there's a lot of incorrect things out there about over 100% of the float being shorted, because it's actually illegal to naked short a stock. But market makers can have an exception, so they can do it because they need to hedge themselves. But what people also don't realize, and I think they need to change the rules, a stock can be shorted to float over 100% without naked shorting. So for instance, let's say I'm a mutual fund like BlackRock, and I have shares in GameStop, for example. Well, I'm going to lend those out. And the reason I lend them out in the mutual fund, because it brings in income to the mutual fund, which is to the benefit of all the people who hold mutual funds, which are people in their 401ks, pensions. So it's not like all this is evil like it had been made out to be. It happens all the time. But what happens is they don't have a good system to track these shares, in my opinion. This is where I think blockchain really needs to be used. And I also agree with Vlad that settlement should not be T+2, which used to originally be T+5, and then got moved to T+3. And they're talking about changing to T+1. I think it should be instantaneous using the blockchain, and that would solve an enormous amount of these problems.
Yeah,
but right now, there's no real good tracking. So let's just say if I'm Fidelity and I'm BlackRock and I have shares in GameStop and I lend them out to Melvin Capital or some hedge fund, and then those same shares somehow get lent out to someone else. And I don't think any of this is intentional, and none of it's illegal. It's because what's happening is there's not a good tracking system. So when you go to find shares, because if you can lend out your stock and then call in your shares, theoretically. So if you have an account at some brokers, even as an individual over 250K, you can say, hey, I want to lend out my XYZ shares and get the interest rate that's really high, annualized, maybe as much as 100%. And then one day you could say, hey, I want to call in my shares. The broker goes out, locates shares, and brings them back. I don't know if it's true, but I heard rumors people had a hard time locating where all these GameStop shares were heard all this frenzy.
Oh, really? Because they've been moved around so many times?
Right. So that's what I'm getting at. It's just like, and then when the mortgage crisis in the MERS system, nobody knew who owned what or had what. I have a feeling a lot of that infrastructure caused a lot of these problems because it was so extreme and so fast how this GameStop thing happened.
Right.
That's why we need the blockchain and all, so everyone can know instantly. I don't know if it'll be scanning a QR code in the case of shares, but doing something like that where you instantly know where this share is or this CUSIP, exactly where it's at, the discount holder.
Oh, that's a good point.
Instantly. And that way the same share could be lent out. I'm just guessing because these things happen in financial markets like 18 times when you think it's only lent out once.
Yeah, right. Well, that's a good way to switch gears here a little bit. So how do we How do people, I've, another thing that I get a lot is just like people don't know where to even start to learn about Bitcoin, cryptocurrency. You're obviously a big proponent of all that. I know you're very involved with all of it. Can you just give everyone like the 30,000-foot view of like, if someone's like asks you what is a Bitcoin and how does it work? I know it's very complicated. We could probably do a whole episode on just how it works, but like, what's like a very simplified overview of what blockchain in Bitcoin is?
Right. So the first thing I would say, if people are interested and they haven't gotten involved yet, because I think we talked about this before, when the price of something is going up, everyone gets excited and they just jump
It's
in
gone up
without
so
really
much since we talked last time
without
too.
really knowing what they're into. Some of the people. So the
Right.
first thing, I mean, YouTube is great. You can learn an enormous amount on YouTube and free education courses, but still use critical thinking because some stuff may or may not be right. But I look at Bitcoin, and I think we might have talked about this a little before. It's kind of like the money of the internet. And now I even kind of look at as kind of like a Bitcoin savings account, because you can get accounts with things like Voyager, and with even a very low balance of Bitcoin, now you're taking on the counterparty risk of an exchange, you can earn 6.5% interest on your Bitcoin. Now I wouldn't put all my Bitcoin there, obviously, because there's counterparty risk, but that's better than earning zero in a savings account. Now, I know there's people like Michael Saylor, a very intelligent guy, graduate from MIT, runs a publicly traded company, that believes Bitcoin is truly like a bank account. So the market cap of Bitcoin, is a little bit over $1 trillion. That's your way of kind of getting your share by putting your savings into that dominant digital network of money. That may not be his term, but that's the term I'm using. But really, Bitcoin is, they call it a cryptocurrency, but to me, it's like kind of becoming a reserve asset, ending on the balance sheets of corporates. And I think eventually, if the market cap gets high enough in the tens of trillions, it'll end up on the balance sheet of sovereigns, but the market cap has to be high enough to absorb it. But Bitcoin's basically like internet money, the reserve currency of the internet, and it uses this thing they call proof of work, where the miners solve this complicated math problem. And once it's get a consensus, then everyone says, okay, all the blocks are validated in the history of the Bitcoin blockchain. That's a valid transaction. And it's interesting because in the beginning of time of Bitcoin, when Satoshi or whoever he is, or the group or she invented it, you or I could have mined Bitcoin on our computers. But now the math gets so hard, they had to come up with ASICs, and people are using GPUs. Now you have to have mining pools, because I guess technically you or I could try to mine it, but we would never solve any blocks because our compute power wouldn't be fast enough. And that's why you have the mining and the concentrated pools. Because there's a new cryptocurrency now. I'm running a node. I might not pronounce it right, Chia, where you can mine. And I'm hoping it ends up like Bitcoin. I get in early.
Oh, nice.
And I get some by mining it. Well, see, you never know with these things. There's a bunch of these things that pop up. So I'm running a node, so it's mining it on my computer. Yes.
Oh, very. What's it called?
Chia, CHIA.
I'm gonna write this down. I'm gonna check it out. I'm gonna get on it.
And I believe I may be mistaken, but I think that's the one I'm doing where the founder of BitTorrent invented it, and Naval Ravikant is either a big proponent or an investor. I may be getting that mixed up with something else, because there's another thing, a new social network, where you can do your own social token, and I joined that too. So all this stuff is highly experimental.
Yeah.
And,
but it's fun, probably, just get in and diversify.
It's fun, and it's good to learn too, because just like I tell people, like with Binance Chain now, they have these things called Pancake Swap. Whenever I go to learn about something, there's also a cost to education that people don't understand. So if I want to learn about something, I realize I can make a mistake and lose some money or mess up with fees or do something wrong with learning about yield farming and things. So like, for instance, I'm getting into Pancake Swap and Binance now. And I was teaching myself by watching YouTube videos and reading about it, how to change your MetaMask over to, I think they call it RPC URL, to get on the Binance chain. But I said, to experiment, I'm just going to buy one BNB for experimentation. That's like $300, I think it's like $370 or $350 a day. The price moves. And if I totally F up and just accidentally lose it by sending it the wrong way, even, that's only $300, but it was education. And hopefully, obviously, that doesn't happen. And I start experimenting on Pancake with these different things. And I may experiment just in speculation and lose that one BNB. But even it's not the end of the world, because it's like education.
Okay. Yeah. Right.
Now I know for some people, like $300 could be a lot of money. But I mean, you get what I'm saying, though. It's just the fact when people think about these things and they, oh my God, the cost is so high, we do this, that, or the other. Well, the cost of education when people go to college is exponentially higher than that.
Yeah. Right. You don't get a lot of that back sometimes either. So then wait, so to back up a little bit what's like the simplest way to explain the blockchain for people who don't really know a ton about it?
Right. So the simplest way is, at the very basic thing, it's a database. But the blockchain, the Bitcoin blockchain specifically, is a mutable database. So everything that happens on there can never be erased. Now, they say in theory, if someone did a 51% attack, they could erase it. But it's my personal opinion that we're so far along now, if a 51% attack were to somehow happen, they couldn't erase the entire blockchain. It would be too hard. They might erase or reverse a block or two, or something might go haywire. But I really think nothing's impossible, obviously, but it's next to impossible to erase the entire Bitcoin blockchain at this point.
Got it.
At this point.
Okay.
And
it builds on itself, right? So every time Bitcoin's traded or used,
the more blocks there are, the harder the math is, the hash power rises as the further we get. So, I mean, it'd be really hard to erase that thing back to the genesis at this point. I don't want to say anything's impossible, and all these people say, well, what about quantum computing, and what about this, and what about that? Well, when everybody usually thinks something's generally wrong, and there's also built-in safeties into the proof of work that even if the quantum computing figures certain things out, it can only figure it out for so many blocks, and the Bitcoin blockchain would adjust. And also, what I always say, too, no one ever says this. The biggest danger to Bitcoin is if the power grid went down, they turned off the electric. Then the miners wouldn't be able to mine any blocks.
Yeah, 100%.
But I always say if that were to happen, I think we got a lot more to worry about than our Bitcoin.
Yeah, I was going to say we got a lot more, right? That does freak me out. That's the biggest risk to Bitcoin to me. Somebody turning off. You turn off all the computers and the power. Well, yeah, that's a serious threat. And to me, Bitcoin and the Bitcoin blockchain is really valuable because it's backed by the computing power of the Bitcoin blockchain. And look at Amazon Web Services. Look how valuable that is for computing power. So just like to use the other term I was using, dominant digital network, $1 trillion network, and it's like money. Bitcoin is money, the internet of money, the internet of value. And people don't realize, too, you can build on top of the Bitcoin blockchain on layer 2, on the Omni layer. And I'm not sure if Microsoft's building on the Omni layer, but I think it's huge now that there's an announcement that Microsoft's going to allow some people to build some kind of applications using this thing they're called Ion onto the Bitcoin blockchain. There's not a lot of information about it, and it's new, but you know how people build on Ethereum and their smart contracts? Theoretically, you can do that on, and I think technically on Bitcoin. The reason a lot of people haven't done it is because you don't want to clog up the network. Because people complain, well, Bitcoin's slow and it doesn't scale, but that's because it's so secure. That's actually a feature, in my opinion, not a bug. So we have to really be careful about clogging up the network and risking any security in it. Because there's upgrades coming like Taproot that's supposed to help the Bitcoin blockchain scale and be faster. And I hope that they're very careful and they're very deliberate and very slow in implementing these things, because we definitely do not want to sacrifice the security of the Bitcoin blockchain. Right. Okay, that makes sense. What do you think? Like, there's so many, obviously, and you're wearing a shirt. I've never heard of that one. What's Filecoin?
Oh, so that's Filecoin. Yeah, that thing's been going bananas lately because NFTs and IPFS is a really good storage solution for people storing their NFTs. Oh yeah, it's a great project.
Okay, I haven't heard of that one. What is your perspective though? The other question I get a lot is just like, there's so many. Like, is Bitcoin and Ethereum, are those just like the main two you should invest in, or like, how do people narrow it down? I mean, you're very into this, so I figured you'd be a good person to ask. What's your perspective on all that?
I actually co-authored an ebook about why family offices should consider purchasing Bitcoin and Ether. And so I believe if people are just getting started, obviously it's easy just to get Bitcoin and Ether now, especially with PayPal allowing you to do it. And PayPal even lets you spend it supposedly at 26 million merchants. I've never actually gone through with that.
I just saw that. Yeah. Well, plug your book. What's your ebook called?
So it's why family offices should consider purchasing Bitcoin and Ether.
Awesome.
I always forget the whole long title because I'm co-author because I did it with the guy who's the founder of Family Office Association.
Okay, nice. I'll make sure I add to the show notes.
Thanks. I titled it Chain Reaction. It's free ebook. It's a PDF, but it's basically meant for family offices just to get them, saying why you should do it. I have a feeling a lot of family offices on the download secretly been buying Bitcoin.
Okay, do you? Yeah, maybe, right? Well, it's so much easier now, like especially with it's on Robinhood. It's on a lot of platforms now.
Well, they probably wouldn't do it that way, but there's a lot of custody solutions now, a lot of institutional ways to get it. But I always say, obviously, because Bitcoin and Ether now have futures, so they're the two most stable ones. And Bitcoin's been around, 5 or 6 years, I guess, longer, or maybe 7 years longer than Ether, because I guess 2009, it was 2015, 2016, or whatever. So it's 5 or 6 years ahead. But I believe that there's going to be many different blockchains succeed and many different protocols built on top. The way that Facebook, Google, and Amazon are built on top of the TCP/IP or whatever you call it, the protocols, the internet, the fat layers.
Yeah.
And I think very valuable things. And it's very hard to know which ones are going to be like the Amazon version, the Facebook version. And it may not be a social network or the AWS of it, but it's going to be something very valuable built on top. But I think there is a different use. Different blockchains have different, I guess, superpowers, for lack of a better term. So Bitcoin's real superpower is security. It's secure. It's 99.99999%. It's not going to be hacked. You know everything on there is valid. You know it's immutable. Ethereum, is a state machine actually in computer science, and it's trying to be the computing platform of all of the world. I mean, that's huge.
Yeah,
I mean, a
right.
lot of people say, well, it doesn't scale and it's not fast enough, but people are building on top of it. They're working on things like ZK rollups and things. I don't know which ones are going to pan out. And now they're doing this upgrade called Beacon, where there's people sharding. I think it's 16 different ways, 4 different beacon chains, which I guess is 64 kind of chains or side chains. I'm not sure the exact technical definition, but all this is still kind of experimental, but it's still kind of working in the real world, and people are building real world applications on top of Ethereum with DeFi. So I think decentralized finance is the actual threat to the banking industry, not Bitcoin.
Okay.
Decentralized finance. So what bankers should learn about is DeFi and the products so they can start working and integrating themselves. Like Mark Zuckerberg says, if we don't disrupt Facebook, someone's going to disrupt us. That the bankers should be thinking that way, that Bitcoin isn't the real threat. And I always kind of giggle too when people say Bitcoin's a threat to the dollar and all.
Yeah,
I don't necessarily think it is, because if we have a dollar crisis, they could kind of like fractionally back at some by Bitcoin to bring back confidence. And we're going to have central bank digital currencies. And I've been going around saying that, when the Fed does that, they're probably going to do a public-private partnership with someone like Circle's USDC. I know there's rumors that I don't know if they're true, that someone that's already been doing this USDC for a number of years and is working with Visa and stuff, because you don't want to just roll this out as an experiment when it's people's money.
Yeah, for sure, right? What does that mean? So you're saying the government could kind of join up with some of these like private firms in the crypto space to like leverage the dollar, essentially?
Right. So I believe eventually, and I said this on this thing called Exploring the Block, that in 5 years, this was in 2018, that paper money would essentially disappear. Now, there might still be some out there, but we're going to, even if it's not cryptocurrency, it's going to be more and more just using your iPhone, Apple Pay, tapping on something, or Samsung Pay, or something of that nature. But I actually believe there will be a stable coins used and a central bank digital currency, which they're talking about something may happen in July. So that probably means when they say July of this year, that probably means it takes them a year longer or something like that.
Yeah.
But it's basically a stable coin, a cryptocurrency on a blockchain. Now, it won't be like Bitcoin. It'll be probably more centralized, where the Fed will issue US dollars, and maybe they'll partner with using USDC with Circle. And so your dollars will now be digital. Now, I have a feeling that too, like right now, you know how you have a bank checking account. Some people would have some money in their checking account or different checking accounts, and it's in fiat dollars. That there's going to be some kind of on-ramp, a protocol where it's a proof of verification of your bank account. And then when you go to transfer it, it automatically mints crypto money, a crypto dollar, and that way I can send it to you easily, fast, instant settlement. Initially, because I don't think they can initially turn every dollar in the bank to crypto. That's kind of hard. I think that would be an onerous project.
Well, yeah, it seems like there's not enough buy-in maybe yet either. I feel like there's a lot of people who still are a little worried. Like I had a question this morning from a buddy who just said, like, I don't really understand it. I feel like it's way too volatile. Like the price is all over the place. Like how is there ever enough stability in it to fully move to it?
But stablecoin is backed 1-to-1 by the US dollar. So you know how the US dollar is backed by the full faith and credit of the US.
See, I've never even heard of that. Stablecoin?
Right, so $1. There's many different types of stable coins, but in the case of a Fed coin, for lack of a better term, or central bank digital currency, like $1 US would equal 1 USDC or US Fed coin. There actually is a USDC by Circle now that's already out there. So it's pegged 1-to-1 literally to the dollar. So for every dollar in circulation, the Fed just goes, booyah, magic, it's there.
Yeah.
It would be backed by one stable coin. So when I send you a stable coin that's Fed coin, and maybe they're using USDC and the technology for that, they may not call it USDC, or they may just keep the name and add backed by the Fed or something like that.
Yeah.
You will know with 100% confidence it's just like a paper greenback.
Oh, interesting. Okay. And so is the Fed pumps more money in?
Always $1. Always $1, only $1 on the stable coin.
Got it.
If it's backed by $1. There are ones that are algorithmic and not necessarily 100% backed, and could break the buck theoretically. That actually happened with this thing called Tether. But if it's backed by the U.S. government, I'm pretty confident. If they say it's $1, it's $1.
Okay. So if the Fed pumps more money in, like they've been doing, does that mean there's more stable coins that are available? Like the supply goes up?
Right, so they could create more stable coins. And a lot of people say, yeah, that's just basically taking $1 and making it digital. Because I would argue the dollar is kind of already digital. I mean, your bank account a lot of times, it's just a digital transfer.
I was going to say, you don't really ever see the actual bills, so it's kind of funny.
Here's where I think the importance and the big thing that everyone misses about central bank digital currencies. It's good and bad. So they get a lot of control. So a central bank could literally communicate with James and Shane and say, okay, here's your Fed wallet, your digital wallet, your USDC bank account, whatever you want to call it. oh, by the way, we don't like the way you're using your money. So if you're going to keep $1 million in cash, we don't think that's very, productive. We're going to charge you a negative interest rate of -5%. So now for holding that money, you're paying a 5% negative interest rate. But they may say
Oh,
to some other guy, just make up a name, Jeff, you only have $200 in your account. We're not going to charge you a negative interest rate. We're just going to let you be.
huh. Okay.
And then they could use incentives and say, okay, if you buy this or if you buy that, we're going to give you a rebate, or we're going to incentivize people to buy or do spend on certain things. We're going to pay you an interest rate or give you more coins or let you stake your. I mean, they could literally personalize our interaction with a central bank. That's crazy. But I do see a lot of good things too, because you know how everyone's always saying like eliminate certain taxes and make a flat tax. Well, I'm totally in agreement. There shouldn't be capital gains tax. There shouldn't be income tax. They should make consumption taxes. But I feel like I don't want the people, unintended consequences, the people at the IRS who are very good people, to lose their jobs. Because a lot of those people have kids, they have husband and wives, they may have parents they're supporting. So you don't want them to lose their jobs just because you don't want the hassle of filling out your taxes. So with a central bank digital currency, taxes could be instantaneous. As soon as you spend it, it's taxed. And now this is controversial thought I have too. I don't know if I said this on your podcast, a transaction tax. So if all stocks settle in the blockchain, it could be literally fractions of a penny going out like 8 decimal points, or in the case of an ERC-20, 18 decimal points. And every time you make a buy or sell, just a very little fraction is taxed. But if that happens, hundreds of millions of times, trillions of times, that adds up. And it could be the same thing on any kind of transaction. So you have a consumption tax. Say if I buy this book from Amazon, which one of my startups did, I get hit with a tax, which is a little bit higher than the tax now. And then there's also another tax, it's fractions of a penny, that, because it's now been turned into tokenization, that also goes into another fund at a different level. And it would get the tax up more. And then we don't have all the hassle with income taxes. We don't have all these people taking these deductions that people say is fair, isn't fair. And then everybody is kind of paying their fair share based on how they're transacting, how they're consuming. And then certain things like where people say, are off book or black market things, or people are using paper money. That's why I always laugh when they say crypto is used for illicit things. More things are used for illicit things of paper money than anything. But once paper money goes on a blockchain, it can all be tracked. There's this chain analysis, elliptic software. They can trace back everything that ever happened with a Bitcoin that you have in your wallet, where it came from. And I think the better technology gets, they're going to be able to trace it all the way back to the Genesis block, and maybe they already can. But on the blockchain, when people say like Bitcoin is anonymous, that's a lie. It's pseudo-anonymous, but they can trace back all the transactions, and via your wallet and going to the internet and IP addresses, even with people using VPNs, they can triangulate that signal, and they can come pretty close and figure out it's you by your habits and your patterns. Because as humans, you're going to slip up and identify yourself somehow. Now, they might not be able to identify you just like that. That's how they caught like people like it's Silk Road.
Well, I just watched that movie a couple weeks ago.
They caught people doing like people using Bitcoin to pay to do like illicit terrorist things, and they catch them. How do you think they catch them? If it's anonymous, how the hell do they catch them? It's not anonymous. That's a load of crap.
So do you think then from that standpoint, I mean, is there a whole group of people who will never want to adopt it because they'd rather use cash because it's harder to get caught, I guess?
Yeah, but I think if they outlaw cash, not necessarily outlaw, but it's really not taken. Because I've heard like in China that if you take out paper money, people look at you like you have 3 heads.
Oh yeah,
it's total Samsung Pay and all this other stuff.
I mean, it's funny. Like I realized the other day, like I pulled my credit card out and I felt like I got a weird look because I always use. I mean, everyone uses their phone to pay now, and it was like, oh,
that's what I do at Walgreens for my prescriptions.
Yeah,
I don't even pull out a credit card or nothing. They got on the app. I put in a credit card. And when I go there, you hit out your phone. And now they even have things with credit cards where it's touchless. You don't even stick it into the machine anymore. You just like
just tap it. Yeah.
And it's pretty cool. So technology is really evolving. And I always say technology is neither good or evil. It's how it's used. There's going to be unintended consequences, and we can just adjust to those that weren't meant to be evil.
Right. Yeah, exactly. 100%. To build on that, the other thing I really wanted to ask you is NFTs. So I think a lot of people, if you're even awake on the internet, you've probably seen some sort of news around NFTs. Can you just explain everyone high level, because you're the pro at this, what is an NFT and like why should people care?
So NFT stands for non-fungible token, and people have been doing these for years. I mean 2016, 2017, it's just nobody cared till lately, because what happens when all of a sudden like something goes for 69 point some million dollars, and at Christie's everyone gets excited, just like when Bitcoin's going up a lot in price, everyone gets excited. But really, it's great because a non-fungible token, it can be one of a kind or it can be like a one of 12. So for instance, a piece of artwork, it could be one of one documented on the blockchain signature so you know it's authentic. So for instance, let's say I bought a Patrick Mahomes NFT. There's like 200 some of this one I bought, and they're
Okay.
numbered. But it's cool because I mean, this
So
is
what? But what
fanboy a
is
little
it?
bit.
What does
But
it
it
look
says
like? Like
sent
what?
from
What is
Patrick. He
it?
actually sent it from him. So it's like in a painting thing, a picture, and then he's going like his mouth is moving, he's cheering because it's like a video image. But it doesn't have to be a video image. It could be an artwork. So you could make a drawing if you're an artist, or you could just make a drawing and make an NFT of your work, and you could make it one of a kind, like a crypto kitty or crypto punk, or you could make it a series, one of 12. Because you know how a lot of artists do these things called prints, and they'll
Yeah.
do like one of 12. You could do
Yeah.
that with ERC 1155 and some of the other technologies and have like one of 23, one of 100 if you wanted to. And it's funny too because people say, well, now these are digital forever. They're not as rare. Well, that's not true either. You can burn them. So if you have one of 10, you could actually buy all 10, burn 9 of them on the blockchain. And now there's only one. And it's funny
Oh,
because some dude
really?
bought a real world art thing, and they made an NFT version, and they went on YouTube. They made a video of them burning the freaking real artwork that was worth a lot of money, and then they sold the NFT for like multiples of that.
Oh,
Insane.
wow. Oh, that's
But people don't
crazy.
realize NFTs can be video too. So I've
So
collected
yeah,
NBA
what
Top
can they
Shots.
be? They can be like videos. Can they be audio? And can they be like all
Yes,
kinds of things?
music. Oh, music. So my personal opinion, I'm a little biased, but this is a great application for music, and it's going to change everything. So I had the theory that if you just have 100 or 1,000 fans who really love you with an NFT, you almost don't need the record label anymore. You can
We
release
talked
all your
about
own
this
music,
last time, I
pre-sell
think, like your
music.
1,000 closest fans.
Right. So the thing is that if you're a musician, you can pre-sell your album, and eventually this probably is getting more to being a security. We're getting to the gray here. You could pre-sell your album, and your fans could have an ownership right in some of the future royalties of the song. And another thing I also like about these NFTs is if I create a piece of art and someone buys it, then in perpetuity, I can keep getting a royalty of 10% every time the next guy sells it. Now, right now, that's not programmed in the smart contract, but eventually it will. So it's all based on trust of the platforms.
Yeah.
But obviously, this is building the trust. I believe the platforms are very trustworthy, the ones who started this space. But with music, it's going to be too. So every time, if I do a music MP3 uploaded as an NFT, if somebody buys that song and they sell it to someone else, every time it's sold, I'll get a royalty or a piece of that.
That's cool. Oh, I didn't realize that part. So, but like, how does like the Patrick Mahomes thing you bought? Like, who owns it? How do you own the like underlying asset to sell?
Right. So it's a little bit complicated, and I'm not like an IP lawyer. So I don't actually own the IP of that picture, but I own that particular thing that's signed on the blockchain by Patrick Mahomes and the creator of that particular one NFT of Patrick Mahomes. And now it's not an NFL licensed NFT. So one of my theses is speculation. I paid $2,500 for this because I believe that the NFL is going to do like the NBA and have truly licensed NFL products. So you're going to have to only do an NFT if you're an NFL player through a licensed product. So these that are actually created by Patrick Mahomes himself will be so damn rare that God knows what it'll be worth. I mean, people have already and people can see you bought it, have already like emailed you or contacted the platform saying, hey, I'll give you $3,500. The minute I bought it, someone was already offering more. And the next day, someone's offering $4,000. Now somebody's offering like $7,000, I think, last night. And I'm thinking, if these things become like, I hate
Wait,
to say
this is for the one you
contraband.
bought? This is for the one you bought?
Yeah, but it was only $2,500 for it. There's
That's
some
crazy
out there
though.
paid. There's things out there where people have paid, like the Beeple thing that went for 69 million. The original Beeple 20 art, some guy paid, I believe, $2 million, and what he did was he wrapped the NFT of 20 Beeple works, and he made a token where people could buy it in fractions. And at one point, it was trading over 130 million market cap, and now it's came down to like 30 million market cap. But and I don't know how that's not a security, because people are taking crypto kitties and wrapping them and selling them as a package, as a token, but they're not considered securities yet. So I think that's a real gray area. I have a feeling regulation is going to call them securities.
See, I think this is so interesting, but it's so confusing to me. So like, if for this podcast, for example, like I have the actual, MP3s of all the episodes I've done. Could I like technically sell one as an NFT?
You certainly could. You could clip, like, maybe not me, but somebody who's like really famous. Like if you got Mark Cuban talking about something, and you could clip that MP3 and turn it into an NFT and sell it. You certainly could.
But could someone else, since this is like on the internet, could someone else clip my stuff and sell it? Like, how would I know?
They certainly could. And it's just like on TikTok, you made that one video and I posted the same video on my TikTok.
Right.
And But yeah, they certainly could. And it's just like the fair use thing with YouTube. As long as someone doesn't copy an entire podcast or whatever, they can take little pieces and it's under fair use as long as they don't take too much.
Right.
So, but with the NFT though, it's the authentication. So when you buy an NBA Top Shot, which is on the Ethereum blockchain, it's on the Flow blockchain, that it's authentic, NBA signed, and the signature says it's authentic. Just like when you buy a baseball card, you don't know if it's counterfeit or not, but people go and get them graded and it'll say like 10 out of 10. So it makes it more valuable that's 10 rated or 9 rated out of 10.
Okay.
Even though I might have a Michael Jordan card in my closet that's the same condition, but until I get it graded and pay that money, it's worth like fractions of that. And the nice thing about the NFT is it's authentic. And same thing with autograph and stuff. You don't have to get it graded. And people say, well, then the value of baseball cards, people are dumb and they put them in their bicycle things and they pitch them against the wall so they won't be damaged. Yeah, but with blockchain, people can lose their private keys and things like that. Now, maybe not on something that's centralized, but on uncentralized things where people are putting them in their wallets, like their MetaMask.
Yeah.
If you lose your keys, you lose all the crap in your wallet. So you could be losing all these NFTs. So they can get lost. I mean, millions of Bitcoin have been lost over time. Like there can only ever be 21 million Bitcoin ever minted, and it's about 900 a day that's mined. But the thing is when we get to the max, there's not going to be 21 million out there. I don't know the exact number, but there's millions of Bitcoin that have been lost that it can never be reaccessed.
Isn't that crazy?
Unless somebody figures out a way to find all those secret keys and reaccess them.
Right. I had a similar situation. I was pissed off. I have a Coinbase account. That's like where I bought my first Ethereum piece. And the like Google Authenticator app, which is what I need to log in, just like it like logged itself out of my like the thing that like repeats itself every minute, like the code, and I like can't get it back. So I've been like going back and forth with Coinbase for like a month trying to figure out like how do I get in my account, because I didn't lose my key. I have my key, but I have to authenticate it and I can't do it. I'm like, what the hell?
Right. And when Coinbase holds your crypto, you actually don't have the private keys. They do. So technically not your keys. True. They say not your Bitcoin.
Yeah.
And now they're saying if it's not on IPFS, it's not your NFT. But anyway, regardless of that though, yeah, but that's centralized. So Coinbase eventually should be able to let you in your account.
Okay. Yeah. I'm sure I'll figure it out.
Sure, but they definitely can let you in your account because they can I guess, what is it called? Deactivate the authenticator 2FA on that, and you can get back in, and they can send you a text or something to your phone to prove you're you. And I believe they can have you, because I know someone tried to hack my Coinbase 3 years ago, and they froze it because people were just attacking it in 2017.
Oh, no.
And I had to, I've been sim hacked like 4 times. So what I had to do was I had to literally take a picture of my license, scan it in, a selfie of me holding my license, and they had to verify it was me. And it took them like forever.
Oh, that's what I just had to do. I just did this yesterday. I had to like take a picture of myself, take a picture of my license, that whole thing.
And this was in 2017 when this wasn't even that common. This is like common practice. And I remember 2 or 3 days went by and I'm not hearing anything, but I know a guy who works there, and I started complaining to him, and he got tired of being a pain in the ass, and they took care of it. But it still took them a week because someone got back to me, and then like a week later. So it took them some time, because I think in all fairness, and for your safety, they had to really make sure you was really you.
Yeah, which makes sense, which I liked. I appreciated like the added, effort. So it's so interesting. So NFTs, I think that's like a huge topic right now that people are really getting into. On the Bitcoin side, like I wanted to get your thoughts on some of the news that I thought was interesting since we talked last time. And the big one for me, I'm a huge Tesla proponent. I talk about it all the time.
I love Tesla.
So yeah, they're the best. What is your thoughts on them, getting into the Bitcoin game? Do you think that's like a big step in the right direction to get, some of these like corporate entities to start using it?
So I do think a lot of corporates are going to end up putting Bitcoin in their balance sheet for this one very reason alone. Interest rates are zero. So if you issue a convertible bond like Michael Saylor did with MicroStrategy, and I'm not saying he's lending it out or anything because I don't know what the rules are, but eventually though, you know how you get nothing on your treasuries? You could issue a convertible bond at basically zero, buy Bitcoin in the market over the counter from a big institution, and then lend out your Bitcoin at 6%. Well, if you have billions of dollars in Bitcoin earning 6% versus cash that would have been earning nothing billions, that's a new cash flow.
Yeah, right. Yeah, 100%.
So I think for that reason alone, if it's allowed, and I'm not sure what the gap accounting rules are, many corporations would do it. But even if that's not allowed, no one's doing that. Just the fact that the Fed printed like 25% more money this year, that might not be the right number. And your purchasing power over time, the cost of capital, it's getting expensive. If you hold the Bitcoin and it stays level, even if it's volatile over time, as long as you can't be margin called out like we talked about with leverage, over time, and nobody knows, I believe that Bitcoin and Ethereum have now turned into like the new millennials original version of the Dow and S&P. So Bitcoin being like 50, 60, 40K because it moves around. I guess it's 59K or whatever it is today. And Ethereum hit an all-time high, 2074, right before I logged on. What if Bitcoin
did it?
over
Ethereum
time,
did?
right? What if Bitcoin over time is 1 million and then 2 million and 3 million? And over time, it's like the stock market just keeps going like this. Because people always said when the Dow hit 10,000, it could never get any higher, even when it hit 1,000 many years before we were born. And now it's like 30,000. So why couldn't Bitcoin be like the new age or the millennials or the Gen Z or whatever they call them?
Sure.
Dow and S&P be, as far as pricing goes, the Ethereum.
Right. Yeah, good, right?
So obviously there's going to be dips and stuff, but what I was saying is just because something is $60,000 doesn't necessarily mean it's expensive.
Got it. Yeah. Right. And that was something I was trying to explain to someone. It's a supply and demand game, right? At the end of the day.
And you can divide Bitcoin into 100 million Satoshis in one Bitcoin. And many Bitcoiners and many crypto people actually price everything in Satoshis, even like other coins.
What is that? What's
that?
Did you call it a Satoshi? What'd you say?
Right, a Satoshi. So when you buy Bitcoin on Cash App, it actually denominates it in Satoshi. So the smallest denomination of one Bitcoin is a Satoshi. And there's 100 million Satoshis. I think that's the exact number in
Oh, I didn't know that. So it's like a
it's like a slice of the fractional version, but they're calling it Satoshis, kind of in honor of Satoshi Nakamoto.
Yeah. No, I love that.
Freaking name.
Yeah.
It's so funny too, because I was just on a podcast debating on why Bitcoin isn't a Ponzi scheme or a pyramid scheme. And I said stuff like, well, they have futures of it. There's going to be ETFs, but I mean, it's just ridiculous now that people would think it's actually a Ponzi or a pyramid scheme, because in a Ponzi or pyramid scheme, somebody is like issuing something, promoting the shit out of it, and then giving you false statements. Yeah. And then they're, cashing out the early people and actually giving them something. Who's doing that in this case? For all we know, we don't know who invented this thing. I mean, it's built on SHA-256. It could have been the government invented this. We don't know.
Isn't that? Do you think we'll ever figure it out? I think a lot of people maybe don't know that listen to this, that we don't know who created it. It's not like no one knows.
Right, and that's why it's a good reason to be suspicious. So what we know is that some computer server, that was Satoshi guy, sent an email to a guy named Hal Finney, who unfortunately got ALS and passed away, and a bunch of people in the cypherpunk community on some kind of chat room all got this email to work on this open source project, the original Bitcoin. A bunch of people worked on it, so it's a group effort. It's not one guy, one gal. And I believe maybe even a supercomputer may have helped work on this, because they could never solve the double spend problem, the Byzantine generals problem, until Bitcoin happened. And there were plenty of people before Bitcoin that tried to do a Bitcoin, and the government shut them down for trying to print illegal money.
Oh, really? Oh, that's funny.
There were things called eCash and eGold. That was like the original, and some others I don't even know the damn names of. And it's funny because a lot of these original pioneers who worked on those things allegedly worked on this Bitcoin. And that makes a lot of sense.
Yeah, it does. Okay. So interesting. So much stuff. I just learned a ton. I appreciate this. Is there anything, as we kind of wrap up, is there anything, like, if you're someone listening to this, and a lot of people that listen to this are into finance, or they're into just like trying to learn, what would be your suggestion as far as like where to go, how to learn, like how to get involved with cryptocurrencies and NFTs and all that fun stuff?
So I would definitely say, like, one of my sayings is influencers are eating the world. And now if you're an influencer, you have a massive distribution. That's a whole new currency. And I think the next big thing is going to be social tokens. Okay. That people can just, you just start Googling on the internet, learning about NFTs, learning about social tokens, learning about, Bitcoin, Ether, the other blockchains are out there, and kind of like read about it and form their own thesis, learn about the people, and then use their own critical thinking and say, hey, because I look at it this way. People ask the wrong question when they get into things about, the Ponzi scheme, the pyramid scheme, intrinsic value, because that means different things to different people. But what if you only had 1% of liquid net worth in Bitcoin, and you're right, the outcome could be tremendous, life-changing, and even save you. If we have hyperinflation and the dollar just goes kaputs and Bitcoin just holds its value relative, if you lose 99% of your net worth in dollars, that could be catastrophic no matter who you are. And Bitcoin could go to the moon, actually equaling that out. Because a lot of people don't realize, priced in gold, the stock market hasn't really gone hardly anywhere in the last, probably since the 70s. I don't know the exact numbers. And in Bitcoin, the stock market, since Bitcoin's been invented, obviously is way behind priced in Bitcoin. Because everything's relative. How you price it in gold, price it in Bitcoin, price it in this, price in oil, different commodities.
You're just saying, you're just saying the Bitcoin market has outpaced the stock market, it's outpaced gold, it's outpaced everything.
Right. So if you price the stock market in gold, I believe the stock market isn't really up. It's up in US dollar terms. If you
Oh,
price the
really?
stock market in Bitcoin, it's obviously way down. If you price the stock market in oil, I'm not sure where it stands. But the point I'm making is that over the time, it seems like the purchasing power of the dollar does get less and less. Even though the CPI inflation isn't real high, the purchasing power of the dollar just seems over time seems to be debased or whatever you want to call it. It buys
Interesting.
less.
I've never heard anyone say that before. So for
It
you
buys less and
personally, just so
less.
people can get kind of a perspective, how even just like on a percentage basis, how much do you personally like to keep in like cash reserves, like checking savings, and how much do you like to have in like the stock market, and how much do you like to have in, the crypto world? How do you like spread all that out?
So I believe now, and I'm trying to transfer over, I believe Bitcoin has become kind of like a new internet money savings account. So over time, I am every week taking more money out of cash and going into more Bitcoin and lending it out at the 6.5%
Ah, okay.
to actually get an interest rate. But obviously, you don't put all your Bitcoin there because you have to diversify into cold storage, paper storage, some on exchanges, some on software wallets, because if something happens, you're kind of decentralizing yourself.
Sure.
So I believe with the dollar and the way the stock market, I think there's hyperinflation in the stock market. So I'm really big into having 70 or 80% of your assets in the stock market, 10% or so in private investments. And you get drift because some of them on paper are allegedly worth more when they get marked up. But until that money is in your hands or in the bank, for lack of a better term, it's not really your money because it can still go to zero.
Got it.
I think in Bitcoin you should try to maintain 1% to 2%, but I'm even going to try to maybe allocate that up to 5% over time between Bitcoin and Ether and maybe some other, and then some of the more speculative cryptos, maybe even 1% because some of them could have 1,000x returns. And now I'm getting into stuff like, even though it's kind of collecting too, that there should be some allocation to, I think even institutions are going to go to allocations into, believe it or not, stuff like shoes, like Air Jordans.
Yeah.
Because I'm into baseball cards and sports cards, so I have some allocation there just because I had collected them.
So
but
you
now
probably
I'm
know a lot.
Into NFTs collecting, and social tokens will be part of it because I'm looking for asymmetric bets.
Okay. Got it.
So remember, I think I mentioned before, 70% core, 20% complementary, and 10% other bets. And what's in those other bets may change, but I do believe everyone should have some exposure to cryptocurrency, whatever they feel comfortable with.
Yeah. So, and you really you're keeping like 10 to 20% in like cash, like true cash, like checking savings.
I wouldn't say it's true cash. I would say now I have less true cash than ever.
Okay.
And part of that too is because the stock market last year was like, believe it or not, with COVID, it was the best return ever.
I know, isn't that crazy?
So you had drift going that way, and then all your crypto went that way. And I mean, on paper, if you want to count that as part of your net worth, all your Michael Jordan cards in your closet went that way. So
it's everything. Yeah, what's gonna? My worry is like what happens once it's all been going. There's so many new people involved, and all they've experienced is up. What's gonna happen when it comes down? People are gonna have to really hold on tight.
Right. As long as you're not on margin, then you can choose whether or not to exit something. But what worries me is some of these people on margin and all these people learning about options and things only went up. But I think that's not exactly true in the GameStop thing. A lot of them did experience losses on some of the contracts expiring.
True.
So it's not like they saw just up. That's just a media thing.
Yeah.
But I also think it's kind of a lie when they say, retail is the end and destroys the market. What happens is retail does come in at the end historically, but the institutions will leverage up to the moon when they see the parabolic rise, and then when it turns, their leverage forces everyone out. And then the retail panics because of psychology. But I think the psychology of younger people, the Generation Z or whatever they call them, is different. They got the diamond hands like that Olympic mentality. I don't know that they're necessarily going to panic out the way these other people do. It's a whole different culture, a whole different way of thinking.
It's true. Yeah, you're right. 100%. Things are changing in a dramatic way.
People just need to read, foster critical thinking, make their own decisions, and make wise choices on how they allocate. Think about, okay, so what are my goals in life? Does buying a little bit of Bitcoin, if I lose it all and it goes to zero, does that change my life, change my goals? And if it doesn't, only 1% or 5% or 3%, what if everything goes right and it becomes worth millions of dollars just for one Bitcoin? How would that change my life, enhance my life, help me do my goals?
Yes, I love that. That's a perfect way to end the podcast. James, thank you so much, man. This is always fun talking to you. I always feel like I learned so much. I got to keep up and take notes. So I love it. Thank you.
Appreciate it, man.
Awesome.
Yeah, and if people would follow me because I'm trying to get more followers.
Yes. Yeah. I was plug everything. How do people get a hold of you? How do people follow you? All that fun stuff.
on Twitter, at Primal Key, and then I'm still working on that TikTok. When I first talked
I
before,
followed you.
I
I
think I,
gave you
I think I
a
had,
follow.
yeah, thanks, man. I think I had like what 7 or 9 followers. Now I have like 90 or something.
Love
So
it.
that's at the Asian Cowboy, and then
At Asian Cowboy. I
at
loved
it's there's a D in front of
the
it because
Asian.
some other
Okay.
dude is
Okay. And
Asian.
I'll add
And
all
then
this to the show notes.
and then on Instagram, I think at Asian Cowboy 12 because there was already other Asian Cowboys, and I put the 12 because Tom Brady's number 12 and he's my hero, one of my heroes.
Okay. Big Tom Brady fan. Got it.
And just anyone who's like a super champion.
Yeah.
Actually, Mahomes is my favorite quarterback. But and then what else am I on? I think that's pretty much all. Oh, I made a YouTube channel too, Asian Cowboy, but I haven't really done a lot with it. I just started.
Love
it's like
it.
six people joined it.
It's one of those things where you just got to be on everywhere. People end up finding you. It's you know what I mean? I've been actually really surprised. I don't have as many followers as you do on TikTok, but that platform is wild with just organic reach. Like,
It's
I've had some
crazy.
videos. I have like 20 something followers, and each video gets 500, 600, 700 views now, which is crazy.
Yeah, it's interesting too because I've been experimenting with hashtagging to see what gets more views. And I'm noticing every time I'm getting more views, and some things I thought would get views, nobody cares. Gets like 6 views, and then something I thought was, yeah, let's try this. Like I think my most is not a lot, but it's like 900 views, but that's better than 6 views.
Yeah.
And then one of me playing my guitar actually got 700 views, and most of them only got like 100.
Love it. No, I love it. No, it's such a cool platform. So yeah, nice job plugging those. I'll make sure I add all those to the show notes and I'll share them out, and I'll make sure when I do the intro and everything, I'll add them. Anything else you want to finish off with before we finish up this episode?
No, that's pretty much it. And I always just say to everybody out there, regardless of their age, we live in the best times ever, and technology is making our lives better than even like the Rockefellers 100 years ago. And some people think, oh, I'm 50 or 60, whatever age, my life's basically over. That's not even true because now with technology, you're going to live to be 110. If you make it that long, you might live to be 200.
Right.
You might
100%.
live to be as old as Yoda. One of my heroes, Yoda from Star Wars, might be 1,000 years old.
You never know. I was going to say, I feel that way. I'm like trying to be healthy and do all the right things, but you never know. I feel like at the rate that we're progressing, who knows how long we'll all live. It's kind of crazy. So might as well invest and do the right things now, right?
Right.
Get in, learn. Love it. James, thank you so much as always, man. I appreciate the time. And this was a fun episode. Absolutely, man. Anytime.
Thanks, man.
Awesome. I'll talk to you soon.
Take care.
All right.
Bye.
See ya. Bye.
Bye.